Mortgage holders are preparing for another hit this afternoon, with the Reserve Bank widely tipped to jack up interest rates again at its monthly board meeting today. The question from forecasters isn't whether rates will be increased, but by how much. Most are tipping a 0.5 percentage point rise.
Well, the bank has been rapidly pushing up borrowing costs since May, with today's increase likely to be the fourth consecutive double hike and the fifth hike in a row. It'll take the cash rate to well above 2%, compared with almost zero just 5 months ago. Let's go straight to Steph Borys at Parliament House. Steph, this is really going to add on those spending pressures for all Australian households. What is the government actually able to do and can do to try and address this problem?
Well, many households are already feeling those cost of living pressures, and as you mentioned, they are likely to be under even more pressure once the RBA releases its announcement today about that expected interest rate hike. Now, to put it into perspective in terms of figures, for someone that has a $750,000 mortgage, if the RBA increases interest rates by 50 basis points, those households will be paying about $1,000 more per month than what they were paying before we started to see these hikes back in May. So it's a substantive amount of money. And the question then, of course, is, well, what can be done to help households? If we look at what government has been doing to put in measures for the long term, they're looking at ways to grow wages. We've heard the fact that consultation has started on industrial relations reforms, and they're trying to get people more employed with the right skills. So that announcement last week about fee-free TAFE places. But what can be done short term? We know that a number of households are really struggling with childcare costs, and there is a plan to introduce higher childcare subsidies for more families, but that doesn't come into place until July of next year. The government has said it won't bring that measure forward because the federal budget can't afford it. Another measure as well, of course, is that petrol fuel excise. The former government introduced a halving of that fuel excise earlier this year. That comes to an end on September 29. The government says it can no longer afford keeping that in place any further or extending it. Now, the opposition has called on the government to introduce more measures to help with cost of living pressures, but it won't actually outline what those measures could be. And furthermore, it won't say whether it will or won't support an extension to that fuel excise cut. Take a listen.
It's up to the government to demonstrate what and why they do. When we brought in that excise cut for 6 months, it was because of the pressures that Australians were facing. And like all decisions we made pre and post-pandemic, we always reviewed them in the circumstances in which they were made. And this is what the government has to do.
Now, inflation is expected to hit 7% by the end of the year. All eyes, of course, will be on the federal government's budget, which will be handed down in October, so not too far away.
Not too far away at all. And that interest rate decision at 2:30 today. Thanks, Steph.